Did you know long-term investment returns are somewhere between 4 to 7% a year? And that the success rate for most traders, including professional money managers, is less than 50% when they enter a position. Imagine if you had a tool that could increase your success rate or your probabilities when you enter a trade, what that could do to your return. I'm Steve Van Metre, inventor of Momentum Timer Pro, and this is my journey on doing just that, on how to beat the odds and increase the probabilities. Now, if you're wondering, what the heck is Momentum Timer Pro? Maybe you're just tuning into this channel for the very first time. Momentum Timer Pro is a daily newsletter or report that scans a number of ETFs, commodity, bond, equity, currency ETFs, and applies a buy or sell signal. And for those who are on the Momentum Timer Pro list, you already know we're on our third edition of it. And if you want to sign up, we're doing an open beta. It's completely free to you. I'll put a link in the description below. All you have to go is to this website, click on the blue button, enter your email address, and you'll get a welcome email. And then starting tomorrow, you'll get the reports. The reports come out daily following the enrollment. Now, if you're already enrolled and you're not getting the reports, some of you have emailed me and said, I'm not getting the reports, and I've checked. You're getting them. You need to check your spam or other folders. Do a search for Momentum Timer Pro. If you've been on this list more than a day, you're probably getting it. So in today's show, I want to look back because we've been doing this open beta with your feedback, and I want to talk about what changes we're making from 2.0 to now 3.1. And to give you a little backstory of why I'm creating this, for those of you who are new, is I wanted to build a program that looked at two things, price and momentum, the two most powerful forces in the market, and would scan a large number of ETFs every day, and then provide a list of the high probability ones for me to look at, and then weight them to build a portfolio, because that's what I do. I'm a professional money manager, an investment advisor. I manage investments, and I wanted to build a momentum portfolio because it's a path that has seen a lot of failure. In fact, I don't know that there are very many, or even if any that exist, they're truly successful. And the reason I wanted to create this is because I wanted something that it didn't matter what the input is. It didn't matter what ETF, it didn't matter what the monetary system was. It doesn't matter where the credit cycles or inflation, it didn't matter. I wanted it to look at a list of securities and then assign a score and weight them to a probability of these are your highest chance of success. And I figured if I could increase that number over 50%, and if I could significantly increase it over 50%, then the long-term returns from this strategy would be impressive. And I thought for those who don't want to have someone manage their investments, or perhaps are outside of this country, which is where this report will eventually go as we expand upon it, I thought maybe you would enjoy having a tool like this to help you become a better investor or money manager, depending on what you do. Now, the hardest part of all this, which was the easiest part for me, was creating the weighting algorithm, which is not going to be released in the report. But now we've made a significant update from 2.0 to 3.1. Let's take a look at what we learned, because we've learned a lot from 2.0 based on your feedback. So let me show you what that is. Now, I'm going to run these side by side for maybe a week, maybe two, and then we're going to stop publishing version 2.0. But this was 2.0. And in version 2.0, you had a 1 month, 3 month, and 6 month signal. It was originally a strong sell, neutral buy, strong buy, which due to confusion, we went to a sell, neutral buy. With some great advice, I created some position sizing. And here's the feedback that I got from you. It's way too confusing. Some people didn't understand. Why are there different time scales? Some people didn't like the position sizing. They didn't like its recommendations. They were confused by it. We even had colors, and I'll show you that would say, hey, in fact, here's a color example today. PIMCO ZROS went from a neutral to a buy today and went from none to minimum. And some people said, well, I need directional arrows. The colors are confusing. The colors, this doesn't make sense. That doesn't make sense. And the whole purpose of a beta test is to figure out what people want. Now, everyone has told me, I want something that tells me when to buy and sell. And I gave you something very, very complex. And what did we learn? It was way too complex. The moment people started suggesting I need directional arrows was the moment I realized The whole purpose of this report was for someone to look at it and quickly make a decision. The fact that it needed arrows was a sign to me that it was too complex. So what did we make some changes? First of all, the position sizing is gone. Now, I know some of you, that was a part you liked. Unfortunately, it's also the most difficult part for me to implement. We've also consolidated the month, the 1, 3, and 6 month into one signal. This past weekend, I really spent some time thinking about all the feedback you've given me, because again, as part of the open beta, when you get the email, you're welcome to give feedback. There's a button in the email that says you want to give feedback to Steve. You click it, send the email, and I read it. And then most times, I actually reply. And so I was really thinking about this, and what I did is I went through all the signals, because in 2.0, it did something very interesting. It had a large number of signals, and they really all needed to be confirming to hit like a buy signal, or even when we had the strong buy, it needed a lot of confirmation, and it was a little bit of lagging, which I was okay with, because that just increased the probability that when a trade would be entered, that it would be successful, and that was the ultimate goal. But I realized there was too many signals, and I had some ideas for some newer signals that I wanted to put in. So I went through and I streamlined the whole thing. I took out the redundant signals. I took out the ones that weren't accomplishing anything, and I narrowed it down to a smaller number of very, very strong signals. And it alleviated the need to have multiple timescales, because I realized that was confusing for you. The other thing I did was I gave you a 10-day look, I'll show you here, of what the signal is. So now, instead of wondering or needing arrows to decide something, it just says buy or sell. There is no neutral positioning. It's either a buy or sell, and you can go back over the last 10 trading days and look to see what the signal is. Now, this is really important in terms of what it does, and we'll go through some examples. Some other feedback I had was, well, Steve, we don't think this can be legitimate without a back test. I actually manage a strategy that's been live for almost 6 years now, that prior to that was all back test. So I understand the value of back testing, but the problem with a tool like this is that people crutch on a back test, but there's one thing you can't back test. I can't back test your emotion. And let me give you a perfect example. Today is Thursday. We got a big high CPI print, which we'll talk about in the macro show tomorrow. And what you'll notice historically, something I wish I've learned a long time ago, was that when you get a high in CPI, you tend to get a low in bonds. So the question is, if you got a report that said buy bonds on the same day you saw a big CPI print, would you do it? Would your emotions get in the way? Would you trust your report? And some people say, well, if the back test said, the back test only tells you what you should have done. It doesn't tell you what you would have done. And that's a big difference. You can't back test emotion. And because of that, oftentimes people will get a signal and then they'll wait a day or 2 or 3 or 4. And that's the whole idea behind this. It gives you a running tabulation of the signals. The more days it says buy or sell, depending on what you're doing, it gives you an indication of the strength of the signal. So I've narrowed this down to one very strong signal instead of 3. We cut out the position sizing. I'm just going to have to let you work on that. There's no other way. On the current version, that's just not possible. And I actually can backtest it now. The version 2.0 was so complex that it was really difficult to try to run any historics on it. The new version, easy. So we're going to go through we're going to look at SPY and TLT today. I'm going to show you going back just the last year or two, just to give you some ideas of what these things have done, to show you how powerful it is. But let's take a look at a couple of these securities and see what it's recommending. Because the best way to look at a report is not to just jump in and follow it. It's to jump in and maybe either paper trade it or note it and start to understand what it's suggesting. So let's just look at today's report, which was in your email. For those who have been previously signed up, if you're just signing up now, you'll get this tomorrow. Let's take a look at ITB, U.S. home construction. And on 6/1, prior to 6/1, it had a buy signal. At least we know for 4 days. And on 6/2, it entered a sell signal. So how would I use this report? Well, I probably would not use it as a standalone report and just blindfolds and say, oh, look, I'm going to just do whatever it says. You want to use this as a tool, a filtering tool, to say, hey, if you're in this position and now you're seeing a string of sell signals, maybe you should go look at the chart or look at your other data and see if it confirms. That's how you want to use it. So let's look at ITB here. Let's pull up a chart of it. And I just reorganized all my stuff to make it easier to find. And of course, I can't find it. Where is it? It's under midcap. There it is. Okay, ITB. And what did we see? It said a sell signal on 6.2. Okay, so let's go and see if this was a chart you would buy. So if you were looking at this chart, and let's zoom out to the 1 year, would you buy this? I probably would not, because I'm looking at what is a potential topping pattern. Now, what happened on 6.2 is you can see right, where is it? 6.2, right here, it said sell. And it's maintained a sell signal the following days. Does that feel correct? And the answer is, yeah. If I had ridden this up and I was sitting here with a sell signal, I'd feel pretty good about that. Let's take a look at some other things and see what's going on. How about bonds? Everyone knows kind of the self-anointed bond king. And you might remember from version 2.0, let's take a look at that we recently got a buy signal on IEF, which is a 7 to 10 year treasury bond fund. And TLT is about to trigger in the next day or two. And then we got ZROS, which just triggered a signal. These three are all treasury bond funds. So you could look at one of them and get an idea where the others are going. So let's look. And now you'll say, wow, these have had buy signals for longer. That's true. The new signal, the new formula, or the new combination of formulas, I should say, is a bit more aggressive. And I did that because I wanted it to identify potential bottoms to give you the opportunity to pick to buy them. Because remember, my goal is to build a portfolio out of this and manage it. Your goal is to look at this and decide what positions you want to take. So there's a big difference between what we're trying to do. But I wanted to at least give you some signals to look at that are stronger. Now, maybe the first time you don't jump on it, but the second time maybe you do. We'll look at TLT more specifically here in a little bit. Let's go and see what other signals we've got. How about Palladium? Now, not something I trade or have ever traded, but you can see now we had a sell signal 10 days ago, a string of buys and a string of sells. Now it's 2 sells. It's probably telling you if you're in Palladium, you need to go look at this chart because this is probably something you don't want to be in, or you might not want to be in much longer. Same with Platinum. It's got 10 days of sell signals. How would I use this in reverse? Well, if I was trading currencies and I was looking for a position and say either Japanese yen or the dollar, UUP, see, I'm running, you see there's sell signals across the bottom. Now, when these start turning to buys, it doesn't mean I might jump on the first one, but if I was looking to enter a position, I would be looking for a several days of buy signals, and then I would check the chart, check my other tools, and say, yeah, that makes sense. And you can see the Australian dollar, 10 days ago at a buy signal. Now it's running 8 days of sells. Now, I don't trade currencies, so I don't even have these on my charts, but these should give you things to look at. Is when you see sells, time to maybe get out. When they switch to buys, that's when you start looking, is this a position I want to take? Now, let's look at some historics. I ran some numbers on SPY and TLT because I figured those are two broad things. I had no point in running a bunch of different tests because I know how it works. And I want to show you just how accurate the signals are. So let's start with SPY. Let's pull up a chart on that. And now keep in mind, when I do things, I do not create the back test to fit a concept. That is generally what most people do. I don't. I look at the signals and then I decide, these are signals that I feel the way they should work based on my understanding of the markets. So let's go back to March of last year. And I thought this was really interesting because nothing really saw this, but in March of last year on 224, this is 224, it kicked a sell signal. That was pretty quick. So right here, so if you got a sell signal on this day and maybe you waited a day or two, you still would have been able to get out. It did not re-trigger a buy signal until 4/6. So you got out here and you would have been buying in here, or even if you didn't buy the first day and you waited a couple of days, you were still there. And then it held that signal, that buy signal continuously all the way up until October of last year. And on the 26th, here it kicked a sell signal. So all the way through here it was up. Now, normally when this happens, you would expect your signals to buy back in up here. I've done this enough times to know how signaling works. Believe it or not, it actually kicked a buy signal back on November 3rd. So even if it would have kicked it back up here, that'd be fine. You're not going to get every signal right, but I thought it was very interesting that it picked it back up fairly quickly. And it's maintained that buy signal ever since. So from 4-6, with the exception of a couple days, which it actually got right, even if it got it wrong, it still grabbed almost the entire move here and lost most and avoided most of this loss. Pretty cool. Now, how about TLT? Now, I know I've gotten a lot of flack over the fact that I've been sitting in this position for a long time and missed things. And so part of the whole point of this tool is, in my long-term macro thesis, which is 3 to 5 years, I'm having to accept the fact that, one, there are cycles in between and I want to get a piece of. Number two, this is really a computer-traded market. This is computerized formulas. So what do you think I'm trying to do? Beat the computers. So if I know about where they enter and where they exit, because I have access to some of that data, you get the idea. So let's take a look at what it would have done with TLT, which of course is interesting. And so it first, so let's zoom in a little bit. It first popped a sell signal on 8/13 of 20. So let's see, 8/13 right here, it hit a sell signal. Pretty good. Now, along this journey, every once in a while, it would pop a one-day buy signal. It's like somewhere in here, I think here. There's 3 or 4 just one-day buy signals, and then they went right back to sell. Which is why I would, again, if I'm looking at this tool, I see a buy signal. It doesn't mean I run out and buy it. It just means I look at the chart and say, is this something I want to buy? It did not next flag a buy signal until 4-6. So if we came down here at 4-6, and then it ran buy signals from here all the way to 5-10, all the way through here, and then it kicked a sell signal. So let's say you bought on 4-6 because you look down here and say, hey, looks like it's trying to bottom. There's some volume here. My other signals say this is. You probably broke even or maybe took a small loss on that. Big deal. It then reflagged a buy signal on 5/21 right here. And version 2.0 is probably going to flag a buy signal tomorrow. That'd be my best guess of what it's going to do. So you'll notice this is a lot more aggressive and it's a lot more accurate. You don't have to worry about, oh, am I on the monthly? Did I buy on a monthly, sell on a quarterly? Am I on a biannual, sell on a, I mean, one signal, and it's powerful and it works. And like I said, if you're interested in being part of the open beta, all you have to do, go to the link in the description below, put your email address in, and you'll get a welcome email. If you get the welcome email, that means you'll get the email tomorrow. If you don't get the welcome email, look in your spam or other folders. It's probably there somewhere, and flag that email address as okay, and you'll get it tomorrow. So anyways, I just wanted to give you an update. For those of you who are already on the subscription, again, it's free. What the difference between 2.1 and 3, or 2.0 and 3.1 are, and 3.1, very, very powerful tool. And I'll eventually write something on how to use it in the report. There's a spot that's now gone for how to use it, but eventually I'll get around to that. But I want to give you some tips on how to do this. I'll probably run side by side for another week or two, and then we'll switch over to 3.1, because 3.1 is lights out, hands down, much better. And with this tool, I think you too will increase your probability of success, and with that, your long-term returns. And if we can accomplish that, then that is a success for all of us, I and my clients, and you as my friends. All right, with that, we're going to wrap up today's show, and we'll see you tomorrow for the macro show. Thanks for watching. Thanks for being fans. Bye now. The content of this video provides educational information only, is not intended to provide necessary or other advice. It is not to be construed as recognition or solicitation, buyer selling security, financial product, instrument, or participating in particular trading strategies. This video was prepared by Steven Van Metre, personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advising or Steven Van Metre Financial.